All right, so this is going to be a indicator that we're going to talk about. So, in the investment world, you have a lot of tools at your disposal. We're going to start talking about indicators. This is going to be an introduction to some of the indicators that are most commonly used and explanation of them. So, sit back, relax, and enjoy. Thanks. All right, welcome back to a technical day. We're going to be talking about an EMA, that's the exponential moving average, and the difference between that and the simple moving average. So, let's get started. I just got a regular EMA here on TradingView. I'm going to customize it so it can, I don't know, help us out in understanding what it is. So I'm going to take it from 9, put to my favorite number 48, and I'm just going to say OK. So if you notice now, I'm going to make this white, and you guys are going to be able to see it better. So here we go, white, and there's a thickness, increase that. There we go. All right, so here is an EMA. So this is going to have more sensitivity to the price action than a SMA, or a simple moving average. Now, it really doesn't matter which one you use. It's all based on how you see price action. So let's see an area here, right here. And what we're going to do is we're going to put a circle around this area here, because we're going to want to come back to it a little bit later. All right, we're going to make sure that when we look at this, we have a better idea of what we're going to be looking at when we talk about the EMA and the SMA. So this is going to be a comparison view. Now, let me get rid of this because this will let us see another. Let's do SMA, simple moving average. We're going to add that to our line as well. Now, if you notice, off the bat, the simple moving average is, there we go. We'll keep that one blue. The simple one is blue. The exponential one is white. And we're going to change it to the same exact thing, 48. Now, in this area, you'll notice that we have a cross of the moving averages. What does that mean to you? Not really much, okay? The differences we're going to be looking at is what has more reaction to the price. Now, the EMA, the exponential moving average, is going closer to price action, and then it also reacts to price action more as it moves up and down. The simple moving average is smoother, a little bit more consistent, and if you're looking for something to help you gauge when you want to be in and out of your trades, it really depends on you as the trader or investor. Now, I am personally a fan of the simple moving averages because they make it easier for me to gauge where price action is going to go, and it doesn't fake me out a lot of trades or investing and entries. So, if you look, these two are not that far off. There's only certain times during big moves where you notice the difference. Now, if you say, I only want to make a trade when price either goes through or bounces off a moving average, well, if you look in these areas, price bounced off of the simple moving average, went through the exponential moving average, and then came back and crossed it. Generally, for me, I'm fine with it bouncing off the moving averages. That's how I learned how to read charts and price action anyway. So I like those more than when price goes past it and then comes back and crosses it again. But essentially, the biggest differences between exponential and simple moving averages is how it reacts to the price action of the charts. And if you notice, it's not a lot of difference. It all depends on you and how you see the charts and how you see the price actions. So thank you very much for listening to this quick video on the difference between EMA and SMA, exponential versus the simple. There you go.